Hey everybody, Kimosabi here. Going to do something that I haven't done in a while, is construct a chart from scratch. Just looking at the daily chart here. I'm going to draw some trend lines. We have our obvious resistances up here. Try to line those up. And then we have this downsloping one from that high, which we currently met on today's candle up. And then we have from the low, we're currently trying to hold that, I suppose, as a trend line up. So that gives us our context for the larger time frame. So now we will zoom in to current price action. And the thing that draws my eyes are these wicks. This wick right here in particular. So I'm going to zoom into that wick and take a Fibonacci retracement of that entire wick. Now I want to mark off 0.5. I'm going to do that with a horizontal ray. Just put it right there. Interesting to note that the previous wick came down, found support, then it broke support, came back up, and never back tested that to see if more supply was there. Price just continued up. Very interesting to note. Now I'm going to mark off areas of interest. I have a fair value gap right there. That's inner circle traders methods. That may be of some interest on a daily. Also this one right here, you kind of have it going all the way down to that wick. And you just touched into it just today. And those, you could treat those the same as wicks. According to his methodology, 50% of that becomes a trade area. I'm going to mark that one in red since we are below it. So that may end up being an area to sell. And just for good measure, I'm going to take a Fibonacci extension, measure from low to that high, project from the low, see where the 618 lands. And this is in log scale. In linear scale, the 618 comes a little closer to that, the center of that fair value gap on that candle. And in log scale, it goes up to the top of there. So that could be a target in the future, maybe. Zooming into this area here, now that we have those areas mapped out, mapping out our liquidity. Where is our current liquidity? Locally, the only ones I see are down here. So liquidity is usually opportunity, and we do have a FOMC meeting tomorrow at 2 p.m. New York time. They release the minutes, and then 30 minutes later, they let the market trade a little bit, and then they have the press conference. We'll look for a purple tie. Go Camel Crew. But that's the only liquidity that I see. This wick over here was taken out today, barely. So technically anybody who was short from there got stopped out. Any push above there, we're going to be getting into this gap, and we might fight with it a little bit, but ultimately you'd be looking for that liquidity above 64,500. All right, zooming into the 4-hour chart, we'll do our standard box. We'll mark out the box. Looks like it's right around there. Could be up here. That doesn't look bad if it's up there. But we'll go with those wicks and those supports for now. And we'll turn the color green. Alright, now that we got that marked out, let's look for the opportunities and potential trade setups and how they play out. Just looking at trying to match patterns here. That doesn't look too bad. So then maybe you mark this over here, this comes down like this before repeating that, giving you a breakout from that downtrend line and going to attack that upper downtrend line that we marked off earlier. But if price does get up there, you still have this liquidity down here, so I might expect a sharp move down. You know, the market loves to do it. Currently, from this current stance, my preferred idea would be to resist this downtrend and not break out, come down, grab that liquidity, then push back up to that trend line. That might be your volatility for FOMC, and it would look really good if you maintain on the 4-hour chart, if you maintain the higher highs and higher lows. So say you get a wick down there, but it still closes somewhere above 59, and you can maintain your higher highs and higher lows, and then get a break. That would look really good to me. So then how do you trade it? So if you get the FOMC news, maybe at 2 o'clock, you get a push down, I would use this wick right there as my stop loss. I wouldn't want to see that broken. I would want to see price supported on this support at the bottom of the box, essentially. Kind of what I was talking about, I think 2 videos ago, where price comes up, breaks down below, gets back to the top of the box, finds support at the bottom of the box, and then breaks out to the upside. Doesn't necessarily have to maintain the higher highs and higher low closures the way I'm suggesting. It could close a lower low and then attack that trend line. Might reject it and come all the way back down to this trend line and then stop you out, and then consolidate all the way until early October. That is the market maker's game. The liquidity providers like to keep it in a range. They make money off the fees going back and forth, and they'll tighten up volatility, put liquidity on both sides of that triangle, and then they'll fake break one way and reverse the other, or they'll fake break it down and reverse back up, because they just want the liquidity. They just want to grab the liquidity and then they'll reverse it on you, or they'll break up and grab that liquidity and reverse it on you, which is why these consolidations that kind of consolidate into a point, like triangles, become maximum liquidity for the market makers. They'll break it down and then go up, and then this would be like a ABC before going up, and there's like a wave 1. This would be your wave 2, stopping everybody out, coming pretty deep into here, and then breaking up. Which is why I say if you are going to try to buy this liquidity down here, your stop loss has to be pretty tight. And see what it does. Maybe off of this trend line here, you might start to get a series of higher highs and higher lows on a 1 hour. You could jump back in to up there, and then maybe it comes back down. Your stop losses have to be progressing higher as price consolidates higher. Let it grab the liquidity, let it stop you out, let it grab all the liquidity, and then see if it reverses. If it does reverse back into the triangle, then yeah, take it up, because it's probably a trap. Same difference if price breaks up out of that trend line and doesn't progress very far, gets back in the triangle, it likes to search out the other side of the triangle. Then maybe it comes right back to the point and goes sideways some more. But what you really want to see for an uptrend to start, you need a daily candle close above 64.5. Doesn't have to go much above there, but hey, why not close up there at like 67 or so, and that would give you a high, a higher low, a higher high. Then you can buy the higher low that actually might be this liquidity. If it does break out to the upside, it might come all the way back down there for that liquidity to then go up. So pay attention to trend and pay attention to the liquidity. This liquidity is just ripe for the taking, either now or later. I do see that area as something to pay attention to in the future. If this does break up, it could just come all the way back down like that into October before going up. So it's technically a breakout, but then it makes you wait. I think direction may be revealed this week, though, especially if we get this liquidity here and breakout. That might set itself up to consolidate here to for the rest of the week, and then have a short squeeze over the weekend, which the weekend short squeeze is kind of what makes sense to me, since during the week we tend to have selling pressure. So over the weekend, low liquidity breakout could be, well, it could fuel a big uptrend, so that anybody that was trading during the week, anybody who was short, is going to have to close in losses, essentially buying the market up before price reverses back down and back tests, and then maybe continues thereafter. Let's zoom in to this little area. I'll explain my Monday trade that I took. I actually bought here on that reaction because it was holding above that, and then that stopped me out. Always fun to get stopped out. But then price from there started making a series of higher highs and higher lows. So as soon as I got a 15-minute higher high close, enter long, stop loss was at the wick low, and I ended up not getting stopped out. Took some profits as soon as it broke above here, took a partial, and then now that one is closed because of this liquidity. I'm really expecting this to come back down eventually. If price breaks out, then I would match this leg and then take it from here and trade that leg up. So sometimes we get stopped out and then it goes the direction we're expecting, and the only thing you could do is monitor the chart and look for a different opportunity. I wanted this liquidity before going up. Market decided not to give it to me, so it gave a series of higher highs and higher lows on a 15-minute, and I took that instead. Said, no, it's probably going to take out the sells from the weekend. Anybody who was long from the weekend, stop them out. Anybody who's short comes up, stops them out too. Kind of a common occurrence there on weekends, kind of the way it works. But we are back inside the consolidation, so that's a good sign. Let's see if the box holds for a show of strength, and then enter markup phase. It's kind of what I'm looking at for now. Like I said, stop losses are just below the box there for any buy setups that I may have, that I may find during FOMC, or might find a sell setup during FOMC. I'll try to update as soon as I see something that looks actionable. But for now, just looking for that liquidity. So hope that helps, guys. Have a good night and keep your stops tight.